Global markets have just experienced their second major wobble of the year, for several reasons, including the ongoing trade war between the US and China, the approaching Brexit deadline, and fears over slowing growth and higher interest rates. With equity markets in turmoil, some investors have been heading towards safer assets such as UK gilts and gold, both of which have seen minor gains in the last month. The Chancellor unveiled this year's budget on Monday and sparked plenty of debate with his claim that austerity was coming to an end. He emphasised the continued decline in unemployment, which is now at its lowest level since the 1970s. The economic growth forecast for 2018 has been cut from 1.5% to 1.3%. It's forecast to climb back to 1.6% next year, and then stay around that level for the next few years. Unsurprisingly, most of the major markets were down last month. UK equities, measured by the FTSE 100 index, fell 4.9%, while US stocks were down 6.8%, and European equities fell 5.9%. There were also steep declines in emerging markets, particularly China, where the market continued to fall another 11.3%. Meanwhile, the pound has had mixed fortunes in the last month, as it's gained 0.5% against the euro, but lost 2% against the dollar. As for the Courtiers multi-asset funds, this time last month I mentioned that a large chunk of the equity exposure came from call options, which would act defensively in the event of a major market upset. Well, that has proved to be the case, as despite beginning the month with close to maximum equity levels, the funds have all outperformed the market during the major downturn. Whilst the overall market decline was 6.8%, the growth fund fell just 4.5%, while the balanced risk fund lost 3.1% and the cautious risk funds 2.3%. As we head towards the US midterm elections and that Brexit deadline, we'll be continuing to monitor the equity exposure of the funds very closely, and we'll be looking for further opportunities in the options market when they arise.